All right, you guys, welcome to the Investor Professor. My name is Safia Quinn. In this course topic, we are going to talk about boycotts and stocks. There is a lot of news going around about how we are going to be strengthening our economic presence as the people and let those in power know that we are not happy. And I had a few questions in the comments, people asking me about whether they should be putting some calls and puts on some companies in particular Target, right? And my initial advice was no. And I'm going to tell you why, okay? So, a boycott, just so we know, is when consumers or businesses can participate in boycotts as well, stop purchasing goods and services from another company due to ethical, political, social, and environmental reasonings. Okay. This is supposed to have the intended effect of significantly affecting that company's stock price, their revenue, and their brand representation, right? That's the reputation. That's kind of the three things that your boycott is trying to hit. It's trying to hit the stock price, it's trying to hit the revenue, the actual money, and it's trying to hit the brand's reputation. So short-term impacts, okay? And this is one thing, when you're doing calls and puts, you got to know that, you can set it out a few years, right? Or you can make them short. So the short-term impact of a boycott on a stock is increased selling pressure. So meaning the whisper, the gossip, the rumor of a boycott is going to make investors agitated and more likely to start selling said stock. Okay. That's one thing. Market sentiment shift, right? So negative news coverage, right, of this company that's going to be boycotted hurts investors' confidence, right? And investor confidence is a real thing. Investor confidence is also tied to the VIX, which is our volatility index, and that makes the volatility index go up. So that stock will experience higher volatility with the whispers of a boycott. Okay. So the issue and what I want to guard against is that there are long-term financial consequences of a boycott that you're actually trying to reach with a with a stock, right? With a company that you're boycotting. So you want to try to get to revenue and profit decline. Okay. You want to get to brand damage, meaning you want to get to a place where, you say, oh, let's go shopping here. You're like, no, we don't go there. Brand damage. Okay. And regulatory scrutiny. That's one thing too, especially when if there's labor practices issues, if there's environmental issues, even if there's social politics, right? You want to try to get the eyes of the litigators, the civil servants, the government investigators. You want to try to get their eyes on these companies that you are said boycotting. And that is why, the most historical boycotts that we reference, the Montgomery boycotts, the huge ones, why they were so successful is because they did bring in the regulatory scrutiny, because it's against the federal law to discriminate. It's not against state law to discriminate. It's against federal law. So the Montgomery, did y'all see my phone just drop? The Montgomery boycotts, why another reason for why they were successful is that they perked federal investigation, okay, which was furthermore to push it was the transit system at the time to actually change their practices. So another thing is that you need to understand why boycotts fail to impact stocks. And this is my guidance to the comments I was trying to get to, is the fact that just your initial boycott doesn't automatically equal the success, if you want to call it, which would be revenue and profit decline, brand damage, and regulatory scrutiny. The act of your boycott doesn't always trigger that. And here's some reasons why. Remember, we talked about we're talking about our United States stock market, but we are in a global economy. So if your company has a strong global presence, What you doing in America may not make the dent that you think it might make. And that's something to really pay attention to. If you are boycotting a global company, you might be a drop in a bucket. So that's something you really gotta think about it. And another thing for why boycotts fail: consumer behavior is hard to change. Human consumers, as we are, is hard to change. We're using Target as our boycott example. Where else you gonna go? Right? Supposed to be going to our Black businesses, supposed to be going to our small businesses, supposed to be going to our local businesses, right? All of those things are alternative actions for those of us who just go to Target, okay? So consumer behavior is hard to change. Not impossible, but hard to change. And thirdly, for why boycotts sometimes fail, is companies adapt quickly. You think Target ain't in their think box thinking of how they gonna get you back? How they gonna have so many Black and brown faces smiling with their red logo? They are already on the mission of changing your mind and how fickle the consumer actually is. Just to highlight some case studies of some boycotts, major boycotts and their effect. So in 2023, Bud Light, they had their sales dropped 26% when they were boycotted. Did you guys remember why they were boycotted? When they had that nice transgender lady as their representative, their sales dropped 26%. And their parent company nearly dropped 20% a few months. But look at this next one. This is Nike in 2018, Colin Kaepernick, right? That initially the stock dropped 3% due to the backlash, right? But then it soared 31%. So we just forgave Nike and everybody went out and bought Nike, okay? Right? That's something that can happen. Thirdly example is Facebook in 2020. It was a Stop the Hate for Profit. And there was an advertisers boycott. That was the main thing, that the advertisers were. And there was a brief decline. It fell 8% and later rebound as advertising revenue remained strong. So this is some hardcore ideas around boycotting and stock prices, and that I wouldn't hedge my investments on boycotts. I mean, you can do what you want to do. And definitely in the short term, it's something to look at, okay? But, in the next video, we're going to talk about the SWOT analysis, because there is a way to start analyzing companies, and especially if we're using Target as our example. Analyze the company from a SWOT analysis place to try to understand how much they would be able to weather a boycott. And just so you know, this boycott has to last years. So I hope that was some good information. I hope that was some good advice around our economic power when it comes to boycotting companies. Feel free to let me know in the comments. Also, the YouTube page, check out the YouTube page. It's at InvestorProfessor25. Feel free to comment and follow me. Lastly, the Hillman Talk has been shadow banned. Absolutely. So I am going to stop using that hashtag. Please continue to follow me. And I'm here. Let's keep it going.